Hi everyone, Joe Gentili from Left Tail Risk Advisors. So we're doing the next video in this series on types of life insurance, and now we're going to focus on another variation of universal life insurance. So I previously did a video, if you saw it, on index universal life insurance. I also discussed the basics of just straight universal life insurance. But this video is going to focus on GUL, which is guaranteed universal life. This product is fundamentally different in that the focus of this product is not to accumulate cash value. Some of these products have cash value, but it's really not the point of this. It's certainly not what you want if cash value is the goal. The point of it is to try to deliver a guaranteed death benefit really at the lowest premium price possible to do so. So the policy will have a guarantee in it. The guarantee typically runs until a certain age, and at least up until that age, the guarantee is as long as you pay the premium on time, every time, the policy stays in force, the guarantee stays in place. So these are level death benefit products typically, where if you buy let's say I'm 40 years old and I buy a GUL with $1 million death benefit. If I live for another 40 years from now, it's still going to be $1 million death benefit. That's distinct from whole life, which typically has an increasing death benefit, where that $1 million death benefit at 40 could be multiples higher by the time the person is 80. So it's a level death benefit. The premium amount is a level premium amount. So you pay that amount and the policy stays in force. Now there's some catches to this. So the level death benefit is one because if you're buying this at 40, there's a lot of inflation that's probably going to happen between 40 and 80. So when you're buying a level death benefit that's not going up or keeping pace with inflation, obviously what starts out seeming like a high death benefit, a few decades later, may seem a lot lower. The other issue is that the guarantees in these products are very sensitive. So there's a possibility that if you do not pay pay the premium on time, you could blow the guarantee. So you could pay the premium on time for a couple of decades in a row, and then something happens where you miss a payment, you could end up blowing the guarantee. And since these policies don't carry a lot of cash value, there's not a lot to keep you between missing a payment and lapsing. So the guarantee is very delicate. If that guarantee is blown, typically you can't get it back. So then the policy switches to just basically term insurance for life with the pricing that goes along with that. So what could be a very, very inexpensive premium at one point, you missed a guarantee. Next time you pay a premium, it could be much, much higher. So there's a delicacy to the guarantees here. If you're able to pay the policy on time every time, it can be a relatively low cost way to get a death benefit. So these policies were much more popular, a decade or two ago, and insurance companies really weren't doing well issuing these. They were losing money on these guarantees, so the prices went up for them. They're not as popular as they once were, but they still have their uses for estate planning. So, the benefit is that you're getting a death benefit since you're not getting any cash value accumulating with it, you're getting it at a much lower cost than if it was a policy that were accumulating cash value like a whole life insurance policy. The drawbacks are the death benefit is level, it's not increasing, and you don't have access to any cash value in the policy really. And the guarantees, while they're there, they are delicate. So this is again, a type of policy that has a lot of uses for it for estate planning for the reasons I gave, but it also has things to consider. So there's no version of life insurance or anything really where there's not drawbacks and pluses for it. So this is the type of policy, like all of them, that have both of those. There's uses for it that are great, and there's uses for it that aren't. Um, as always, any questions, feel free to reach out, and I hope you subscribe for future videos. Thanks.